In this video, we're going to talk about the high interest rates currently, right at 7% as of the shooting, and we're going to get after it right now. Good afternoon, everybody. Tad Newton, good old Team Tad Real Estate in the North Metro, Atlanta North Metro area, specifically the Buford 30519 area. If you want to Google the Mall of Georgia in Atlanta, Georgia, that's our home area over here, and this is our area we specialize in, but all over Atlanta, Georgia, and North Metro areas. We can help you with any of those areas. Couple questions people have been calling us about were and have been this high interest rate. Why and how would anybody in the right mind buy a house today at close to 7%, plus or minus a couple points or parts of a point? Well, easy. If you need a home or need to move to go larger, go smaller, it's still not a bad time to buy, contrary to what a lot of people are telling you, because there are things such as ARMs, an adjustable rate mortgage. Currently, as of this shooting, fixed rates are right at 7%, give or take a little bit. But a way to avoid paying that higher interest rate is to get an ARM. An ARM is adjustable rate mortgage. The best thing about an ARM is there's pros and cons to it. The best pro is right now you can get it for about 4.5% to 5%, depending on who you go with. Give me a call over here at 678-898-2099. Call us anytime. I'll be more than happy to give you a couple referrals, a couple different finance companies that can help you with this based on a couple different things, credit and et cetera, time on job and all that good stuff, your stability. But anyway, excuse me. The pros to ARM. Right now you can get an ARM for 4 to 5%, typically 4.5%, depending on where you go to the mortgage company, for a fixed term, 5 years, 10-year term, sometimes a little bit longer, but typically 5-year or 10-year term. Let's talk about that. So a 5-year term, for example, it'd be a 30-year loan, the typical 30-year loan mortgage, and for 5 years, let's say with a 5-year term, you have a fixed rate for 5 years. Then after that, it will adjust to then market prices. So it'll adjust as called adjustable rate. It'll adjust to then market prices in 5 years from the day you take the loan out. Say today, 5 years from now, it's going to adjust to whatever it is then. For 5 years from now, because of the cycles we see on a regular basis in real estate in the world, is things go up and they come back down. Things go up, they come back down. The normal cycles are every few years it goes up and it comes back down. Of course, it's higher now than it has been in quite a while. But what happens after it goes up? It comes back down. When? Nobody can tell the future on that, but we can tell you, I can guess at it, it will come down. When it would come down, 5 years, is that enough time? If it's not, well, it can adjust and it go to the then market price. If it's a little higher, it's a little higher. If it's lower than that, it'll adjust to that. Easy breezy. Is that a no-brainer? To me, it sounds like a no-brainer. So if you are thinking, if you do need to buy a home, office, investment property, if you have 1031 exchange money you need to spend, this is not a bad time with an adjustable rate. 5-year, 10-year term. Give us a call, and we'd be more than happy to put you in contact with a couple different numbers for some mortgage companies that can help you achieve those goals of getting what you need, helping you get reestablish credit or build credit up or whatever it takes to get you in the home of your dreams. Let's give us a call, 678-898-2099. Team Tad Real Estate. Thank you very much.